All right, welcome to another episode of Stocks to Watch. It is my pleasure to be with you again. So we're just gonna get right into this episode, but let me do a quick explanation as to what our Stocks to Watch series is about. So what we usually do is meet up as analysts or persons who are interested in investing, of course, would be investors, and we just talk about what we're seeing in terms of the market, the economy, factors that may impact our watch list. And then we simply just take turns saying which stocks we're watching and why. This is meant to be, of course, for educational purposes, and it's meant to just foster conversation, discussion around investing, around the stock market. And it's usually, one of our most popular series. So if it's your first time here, welcome, and let's just get started. Let me invite my first guest here, Andre Thompson, no stranger to the channel. Welcome.
Thank you. Evening, everyone.
All right. Then we have Matthew Preston. How are you doing, Matthew?
Hey, thanks for having me on, Jermaine.
Or should I say, what does Dan say? Heal up the people there, Matthew. All right. And then we have David Rose. Hi, David. Okay. David will join us in a second, apparently.
He's muted. David, you're muted.
I'm not sure what happened, honestly. Blame Flo.
Okay. All right, guys. So thanks for joining me. Nobody is a stranger here, so you know the format already. We're just going to be talking about what we're seeing in the marketplace right now. And let's just talk about that for a little bit. And then, of course, as usual, we ask each person to state how they go about forming their watch list, because, of course, that may change over time. So we'll start with you, Andre, and we'll go making the rounds just as how you joined. So, tell us what you're seeing right now, how you prepare your watch list, and then we just go around.
So yeah, thanks, Jermaine. Even again, everyone. In terms of how I prepare my watch list, I like to be, I guess, from a top-down approach. I like to be guided by the macroeconomic landscape or the area that I'm looking at. So with familiar territory being Jamaica, I like to look at the macro space and the companies that are set to thrive under the prevalent conditions. After that, companies operating in industries that I think are likely to perform well over the medium term. I like to take a deep dive into those spaces, and then from there, when I start to look at our cherry pick specific companies, I like to assess the financial statements across the board. So in particular, for starters, I'd like to look at the profitability. I like to look at the the cash flow. Ideally, companies that are cash flow positive or generate positive cash flow from the operating activities are ones that definitely find favorable. I also like to keep an eye out on the debt levels. This is pretty much, this varies from industry to industry, but I like to take note of what comprises the debt. So, for example, debt raised when interest rates were low and are now due for refinancing in a currently high interest rate environment, are probably, the company is probably likely to encounter higher refinance costs. So things like that, the strength of the balance sheet, as I said, the profitability, and I also like to look at the management team as well as the outlook for the company itself. And pretty much in a nutshell, that's pretty much how I build out on my watch list. My watch list doesn't only comprise of companies that I'm looking to buy, but ones that recent developments are likely to cause a material change in terms of the operations. So that's things I'd like to keep my eye on, and that will advise me in terms of my next action, whether it be to buy more or to enter this position or to reduce this position or just to exit the position altogether.
All right, cool. Thanks for that, Matthew.
Yeah, so for me, essentially, I just try to read a lot. So I try to read at least an article every day. So I look at Gleaner, Observer, Our Today, all the different news outlets, even some international news. So I just try to keep up with some amount of information, and then I try to say, okay, this information, how could it impact a listed company? So I'm like, okay, is this news good for the company? Is it bad for the company? Could it change my outlook on the company? I also try to look at sometimes companies that aren't very popular. So maybe there's an issue going on in the company. The stock price hasn't really performed for a long time, and people have been, I guess, been turned off from the company. But then I see something that if there's an issue that could be fixed, I try to track it and say, okay, how can this issue be fixed? And then I could use that possibly as a chance to enter. If I think that that issue can be fixed, I try to look at something that could be happening maybe even 5-10 years down the line, and that could benefit that company heavily. Something could change about the company or change about the industry. That's it. So it really is just trying to read a lot and trying to use my knowledge, try to read books and things like that, and try to learn from other investors.
All right, cool. Thanks for that, David.
So, Andre kind of, highlighted how I've had to adapt, or adjust my kind of stance. So the top-down approach works pretty well right now alongside understanding that own company's fundamental perspective. So you mentioned the debt position, you mentioned the prospects for growth and so forth. And why does this matter? So we saw today whereby US inflation was what they would describe as hot. And we saw where their corresponding stock market declined, and more persons are expecting, that the US Federal Reserve, which is their central bank, to less likely cut rates any further, or the number of hikes that the number of cuts that were expected this year has actually gone down. So the reason I mention all of that is companies that are potentially, saying, hey, we bought this new asset, it's been a great cash flow, but we wanted to refinance at cheaper rates. No, they're going to have to be looking at different ways to finance some of these deals or opportunities. And based on how the current environment set up, I've become a lot more circumspect, looking at things like the stock's liquidity, how concentrated the ownership is. So, for example, like a productivity solutions, like the directors, executives, and top 10 shareholders have about 99% of the stock, which means there's a very small free float in the first place. Then, you have to also consider other things such as, who are potential major shareholders and what implications exist if the stock price falls below a particular point. So, whereas in the US, we might know potentially the short interest or how leveraged a stock is. We're doing that kind of dynamic here in Jamaica in the same breath. But basically, what I'm pointing out is some stocks, if they trade with a particular price, usually see a rebound back to a particular mean or range by the end of the month or in a shorter period of time, just because it has great implications if the price stays depressed for some time. So these kind of little notes help, the viewers to understand my perspective, and also, just how you and Matthew or Andre's perspectives, impact how you approach or analyze stocks in this current environment or any environment, to say the least.
Yeah. For me, I guess specifically now, I'm just looking at opportunities for income. So I'm looking at companies. So similar to Andre, I'm looking at cash, but I'm also looking at dividend history, right? Because I don't have the same time. Well, one, I don't have the same time, but I also don't see the same activity, something that we've been talking about for the last year and a half. And so, because I mean, there are always opportunities in every market for cap gains, regardless if there's a market crash or recession or anything like that. But I'm looking at more, I see where investors may favor those companies that are paying out cash flow through dividends. And I'm looking for ones with an attractive yield, of course, within the companies that I will invest in. And there are two known companies that I will not look at, no matter if they're double or triple their dividend yield. And we all know who those companies are. And that's for moral and faith-based reasons, right? So then I rule out those two, and then I'm looking at everybody else, and I'm just seeing either a potential for a really good dividend from a company that maybe I've been paying consistently. I know they're about to up that because they're saving a bunch of cash, and one company comes to mind. Or you may have a company that stopped paying dividends or stopped paying as attractive a dividend since the pandemic, and maybe they're looking to recover. I know I'm not talking about NCB here. And just kind of looking to see finally what the narrative is. Because I really believe that as much as investors speak about fundamentals, speak about all the things that are nice and warm and fuzzy, the narrative is what will typically make an undervalued stock go to reasonably valued, go to overvalued, and even past that, right? That narrative is a very big move of the stock price. And so I'm looking for two things right now. Now I am paying attention to what has been happening in terms of the economy, interest rates, etc. Because I'm looking at the financial industry as a signal to see when we're going to actually get back to 2018, 2019 levels. I think when we start seeing the financial companies move, that's when we're going to see the rest of the market go back to levels that maybe we were seeing at that point. And what I'm hoping to do by then is have some really nice positions in companies that I think are undervalued now for many reasons, right? So that's kind of how I do it. I have less than 10 stocks in my portfolio right now, and I'm looking to just add to those positions over time. It hasn't changed much, I'll tell you. In the last year and a half, 2 years, I've been watching the same set of stocks. Only one or two may add to it within the year, and we've seen that, right? It's really the same set of companies, in my opinion, that are doing okay. Meaning we may see some go up for a little bit and they go right back to where they were before. So I think this climate, especially the high interest rate, etc., favors certain companies. And so I don't think that will change until the climate that we're investing in change. So hopefully that makes sense. So let's start with you, Andre, with your first pick, with your first watch, with your first stock to watch. Let me say it that way. I didn't put up the disclaimer, but let me just say it again for completeness. Any stock, any company, any investment opportunity mentioned here is for education purposes only. And we're certainly not giving you financial advice, but we're giving you the opportunity to learn from what we're discussing. And of course, we recommend that you speak to your licensed financial advisor before you make any investment decision. Over to you, Andre.
All right. So pretty much, the many times that I would have been invited guests on the Learn Grow Stocks to Watch, pretty much my list hasn't really changed that much. I find that my trading style is a mixture of both buy and hold as well as swing trading. So after I would have done my assessment, top down and the fundamental analysis of the companies, these are I probably somewhat engage a little bit of a trading style. Well, whatever the market conditions will allow. So pretty much my list hasn't really changed that much. So my first pick is Jamaica. You made mention of dividend investing, and then I think now is that strategy seems to be widely employed under the current market environment. So that would be my first pick, Jamaica. The stock is over the last 12 months, it's up 113%. On a year-to-date basis, it's up 20%. So pretty much as a screen, I like to look at key ratios, key metrics, and the works, and I pretty much find a lot of the variables to look relatively attractive. It's currently trading at 11 times book value. I believe the market is somewhere in the region of about, the broader market is somewhere in the region of about 15 to 14 times. They're both. And it actually boasts a strong return on equity of 51.6%. I believe it's able to boast. Part of the reason why it's able to boast such a strong return on equity is that it has high leverage, but then the nature of the business, which is capital intensive, and all the works, allows, as I say, sometimes debt levels vary by industries. So notwithstanding the debt levels, when looking at coming, most of the earnings for the financial year ended December 2023, most of the earnings would have been posted. Looking at Jamaica's earnings, seeing where the debt levels would have declined, would have been reduced. I mean, total assets, would have, gone up, by a decent amount. Pretty much to look at the income statement, there's growth across. We see top line growth where revenues would have increased from revenue. Let me pull up the statement. Well, pretty much revenues would have increased, and I think it's public. Everybody would know that following the GIO acquisition, they would have moved from a net loss position of, I believe, negative 7 million to a profit of 24 million for 2023. So last year there would have been a one-off loss on the acquisition of the subsidiary to the tune of approximately 14 million. In the most recent financial year, that there would have been a not recurrence of that one-off loss, and as such, they would have boasted 24 million in profit. And as I said, that would have been largely influenced by a very sharp reduction in terms of operating expenses, and the management team pretty much attributed that to the acquisition of GIO, where now being the owner or the majority owner of, they would be able to, cost would be able to be much lower. And then pretty much the toll rates is negotiated or revised on an annual basis.
That's coming up again, right? That's coming up in around June.
Yeah.
Correct. Yeah. And then pretty much even from a more organic standpoint, traffic numbers would have increased year over year. And the outlook for the company remains positive. There was an extension for the negotiations for the
Williams
right of
Field.
first refusal. Yeah.
I was
I
wondering
believe
what takes us along with that one, right? Because the toll was completed like August last year, the road.
last year, yeah. And then now it's been extended to, I believe it's July.
July
Yeah.
1.
July 1.
Yeah. So I mean that's revenue foregone for pretty much a little over half of the year. But nonetheless, it's my expectation or anticipation that a decision will be made and they will accept that right of first refusal. So from a dividend standpoint, the over the last 12 months they would have paid I believe is
Well, they paid the 18-cent dividend in October last year, and they just announced a 9-cent dividend.
Yeah, so the trailing, so last year, the dividend in last year would have been that payment for the entire year, but it seems as if there's a shift in terms of the dividend policy. Pretty much going forward, we'll pretty much have to wait and see if that's a shift from a one-time payment per year to quarterly payments, or who knows if it's on a semi-annual basis.
I think it's gonna be semi-annual. When I had the interview with Ivan, he alluded to semi-annual, which is why I wasn't surprised to see the 9-cent, because I paid 18 last year.
Yeah.
But I was hoping for a higher dividend than the 9-cent. Really, I was expecting like maybe a 12-cent, 13-cent thereabout. But I know that might have been impacted by the Williams Field toll not currently being under their belt, maybe because maybe if that had been there already, then maybe they would be comfortable paying out more cash.
And just for some context, Jermaine, most companies that actually run the semi-annual structure in terms of dividends is based on the prior 6 months numbers. So, for example, let us say they used the first half of 2023 to determine the 18-cent dividend, and they would have probably used the latter half of 2023 to determine the dividend they're paying out now. So, because I know, for example, and I'm using that something that's been said publicly. I remember, I believe it was Christopher Zaka who mentioned, Sagicor dividend policy semi-annual based on the 6 months performance. That's when they pay the dividend. So they have the Q4, the Q1 dividend paid out in the Q2 period. They go through the Q1, Q2 period, declaring in September. So that it is that kind of half year structure in a sense. And you see it with JSC, you see it with JMB Group. You know, the JMB Group would have its audited numbers published by May 31, early by July, August, they declare a dividend. Their 6 months would end September. By December, you see them declare dividend again. So TG probably might find that same as a structure, where based on the performance in the prior 6 months period, that's what guides the actual dividend payment. Because one thing we have to consider is that while profits might be high, there might be underlying capital expenditures, or at the same time, the company has liabilities going to plan out to pay out in short order as well. So there are many
Yeah.
factors to it.
I get that. And what I'm looking at really for Trans Jamaica is, or what I'm measuring them against is that projected dividend from the prospectus. Of course, your yield is going to be impacted by the price you pay. So I hope persons understand that you can't buy at these prices and get the same yield as somebody who would have purchased at IPO. But yeah, let me. I don't know if you're finished, Andrea. I don't know if you had anything else to add to it.
No, I mean, I have, so pretty much in a nutshell, I think one thing I appreciate with, one thing that's noteworthy is not only dividend payments or attractive dividend payments, but also dividend growth. So I think before the 18 cents dividends in the prior year were roughly like 8 cents for the entire year. So now they've done 9 cents, on a semi-annual basis. So I mean, it's clear where you're seeing dividend growth, where Trans is concerned. I think one thing that we'll probably want to take note of, if you're looking at the trailing dividend, which incorporates the full year dividend last year as well as that interim dividend declared recently, my numbers suggest a yield of 8.28%, and that's at a price of 323. So anticipating that will normalize, we could see a case where the dividend yield probably is revised downwards to maybe have a yield around 5 to 6%. So I think that kind of forward-looking analysis would probably be useful, and just so one doesn't get led astray in terms of the trailing dividend. But in a nutshell, that's my review for Trans.
Okay. I mean, I hope they don't become an average dividend paying company, because otherwise it's not gonna be as attractive for me. I'll just say that because I think the company is structured to pay dividends and nothing else, right? So, I mean, of course, it is the kind of company I think that if you're a dividend investor, it's kind of an obvious one. But yeah, I just hope they don't fall into the pack and become average. Now, again, that all is based on the price. If the price is at $10, then the yield may very well be like 1 to 2% or something like that. But you get the idea. So Matthew, you're up. Or if anybody has anything to the negative of for Trans, not necessarily negative, but maybe something not mentioned before, some other side or alternative that may be worth mentioning. If not, then Matthew, you're up.
So I'm hearing an echo. One of my picks would actually be Wigton Wind Farm. So I've probably spoken about this on other forums and stuff, but I think even, was it Simon spoke about it at your last Stocks to Watch? If you look at Wigton, they are in an interesting position now because, everyone knows probably about greenhouse gases, global warming, and stuff like that. There's essentially a global push to try to reduce the amount of carbon emissions or reduce, global warming. And so Jamaica, along with other countries and other companies, we are all trying to increase our usage of renewable energy or reduce our usage of fossil fuels. And so you're seeing it like Jamaican government, for example, has a goal. I don't know if we'll hit it. I don't think we will, but it's always good to try. We're trying to increase our percentage of energy that comes from renewable energy. So right now, I think it's like 10%. And we are hoping to get to 50%. But at the same time, we're also trying to increase the amount of energy we have too. So you're going to get an increased amount of energy Jamaica needs, and you're also going to get increased percentage of it, or trying to get an increased percentage of it being renewable energy. So there are, and another thing too is that a lot of financing is going towards renewable energy because we all all live on Earth. We're all going to need this. So I think Wigton is not gonna have an issue financing a lot of the projects. I see the government now, government and JPS, they've essentially put out bids. So on the government side, that's the generation procurement entity, or the GPE. They're asked initially for 100 megawatts. An article came out this morning or last night that actually says that they received, I think, 12 bids from 11 different suppliers, and Wigton has said that they are one of the bidders. And it'll be interesting to see how many people actually end up winning that, getting a slice of that pie. I think what they've said is that the minimum someone can get is 5 megawatts.
But the fact that there are so many people bidding, Matthew, doesn't that bode?
Hold on, I'm not done. That's one bid, Jermaine. That's one bid. So the 100 megawatt.
Just one little fact there. No one entity can actually garner more than half of the actual bid.
So I think the minimum they say is 5 megawatts, but the max is 50 megawatts. So I don't know how they're going to split it up. That's one project. The JPS has also asked for more energy too. They're asking for 300 megawatts. Part of it is going to be solar, part of it wind, part of it just battery storage. And then even in the GPE says that they're going to be going through, these different bids that were received. And then they're planning actually later this year to ask for another supply of energy. I think it's 165 megawatts. So I think that it's going to, it's not just Jamaica doing this. There are going to be other countries in the Caribbean that are going to want this. So I think if I don't know for sure, they may not get this 100 megawatt. They may not even get the 300 megawatt. But I think that essentially there's going to be a lot of opportunities, I think, for them to build out one of these projects, which I think, and if you think about the Wigton right now, I think is like 60 megawatts. So them getting a contract of 50 megawatts or 100 megawatts is a big jump in their revenue. So
yeah, I was gonna ask you to put that into context because persons may not understand what that project may mean for them in terms of revenue.
Mm-hmm. So right now, I think they have produced like 60 or so megawatts. The other thing too is that remember that they don't just have to depend on the government of Jamaica or other governments asking for it. They are now, I think what they've realized is that they shouldn't, essentially they're listed 5 years ago, and they were trying to wait on the government to put out bids, but the government wasn't putting out bids, and they were kind of just sitting on a lot of cash, not really doing much. And I think what they've now, probably over the last year and a half, if you notice, they've been doing other projects. So they, for example, the airports, they're like, okay, let's build a solar farm for you guys. There's a farm in it, St. Elizabeth, the Essex Valley. They're like, okay, let's build out a solar project for you guys. So it's not just, okay, I have to wait for the government. There are companies, and look at it, Jamaica has very high electricity costs. We have some of the highest electricity costs in the world, right? So there's a lot of people who want to reduce that electricity bill. They don't want to pay JPS anymore. And so you'll have companies like Wigton and other companies, even Tropical Battery, for example, they can benefit from this because companies will say, okay, I want to reduce my bill. How can I do this? Even look at it that, for example, the government is providing incentives. I think NHT is now offering a loan of, I think it's 1.5 million at 5% if you want to set up like solar, I think a solar system or like solar water heaters and things like that. So
Yeah,
essentially,
yeah.
what I'd
They've
say too,
announced some new things, and it seems to favor those
Mhm.
type of companies.
the other
But
thing too, the government reduced um the corporate income tax companies like Wigton would have to pay. So Wigton before had to pay like 33% or a third of their corporate income, a third of their income was paid out to corporate income tax. They're reducing that to 25%. So that's also a big incentive. And the thing is, I don't think the incentives will stop there. So even though this year these are some of the incentives that we got, I think that if you look at it as we go down, we all realize, wait, the world is getting hotter. There's going to be a rush at some point to say, hey, we've been doing this, we've been destroying the atmosphere, destroying the world. We kind of have to get serious about this. So I'm
yeah.
trying to get ahead of people like that. So that's why you can look at something like that to watch that company.
So my only concern with them, and before you guys chime in, is just I do think that there's gonna be a lot more competition in that space. That's my only concern. You see, if they had somewhat of a either guaranteed contracts or guaranteed partnerships where they didn't necessarily have to be bidding for everything. Because to me, I've been on the side of um, bidding for government projects. Right? There's no guarantee. The process is lengthy one, so it takes resources. Sometimes it can take months to prepare for a bid. You go through this process, you submit that bid, and then you have to wait months again for that to be confirmed if you're selected. Once that confirmed, then you take months again to actually see the revenue because it takes months now to deliver on the project and you get paid in parts. So if they do win that bid, for example, they may not even see that revenues in this financial year, maybe next year. But some of the things you mentioned, I'm thinking it may favor more energy than Wigton necessarily. But we'll get there. David, you're gonna say something?
So to just give some clarification on something, so Matthew, so what happened last year was that Wicton, along with a couple of the other energy providers or IPPs, would have reached the tax administration in Jamaica. TAJ was saying 30%, but Dr. Clark said that no, we don't want these guys to pay 30%. So if you go back to Wicton's prior financial years, meaning after their debits from the government, they're paying 25% income tax. It was only the most recent tax assessment where that kind of, I should say, divergence came up. And Wigton, would have accounted for 30% at year end in March 2023, but Dr. Clark is saying, nah, we're not into that. So it just really harmonizing it back to the 25% rate in effect. So it's going to pay 30% for 1 year and it's harmonized again, right? So it's still a good incentive. So that's one positive. Two, what remember something, Jermaine? In the case of Wigton, they're in what you'd call a much more unique position. So remember, the way Wigton works is that they charge per kilowatt in US dollars, right? And they sell this energy they produce to JPS because they're the ones who have the distribution network to actually supply that energy where it needs to go. So once JPS continues to kick and breathe, and we need the electricity every day, Wigton is not necessarily worried about actually getting paid their money. Because at the end of the day, once that new capacity comes on stream, Wigton only has one buyer to actually get it to actually sell it to, which is JPS. And as energy is produced, it's consumed. And it's not like Wigton has to wait in months upon months upon months to actually get that payment. JPS is going to pay them expeditiously. I'm not sure what time it is, but it's not likely going to be under government contract terms.
Yeah.
So there are two parts of the equation in the sense that they're billing JPS in US dollars, getting paid in Jamaican dollars. So when the FA rate is stable, Wigton's revenues are relatively stable, barring anything else in terms of higher wind availability or anything else to that effect. But where there is a depreciation of the Jamaican dollar, Wigton actually earns more. So in effect, by the nature of how their business is, they can earn more just if the dollar depreciates in context, when the Jamaican dollar to US dollar. So those are just two little key things to put into perspective. And I get the concern that persons have, which is relatively right in the sense that Victor, when they building up all this cash, but at the same time, because they built up all this cash, it does give them some leverage in terms of not just bidding on these projects, but also potentially exploring other opportunities. They'd have taken a stake in the startup Flash Motors, and they would have also, looked to work on some of these joint venture projects with innovative energy company, not necessarily the listed JC company, but a private company that is associated with the former Siboney, but basically they have the capital they can put to work. And the reality is, as Matthew pointed out, once Wixon does actually get to add that additional revenue onto their systems, it's actually just for them to maintain the systems for the most part, and they're fine. The only constraint they do face at the moment is really land and positioning, because the former managing director, which should be Erlington Barrett, pointed out that some of the best places for Wigton to generate wind are in places that are, for example, forest reserves that the government will not allow Wigton to this encroach on. So there are different factors that inhibit Wigton's expansion domestically, for example, in terms of wind. But on the flip side, they're not in a position where they have to be struggling to collect revenue from whoever they sell energy to. It's just one buyer.
All right.
And the only final point is that I'm just watching carefully to see how Wicton changes over the coming months with the expiration of the share cap. And the reason I make that point is because Wicton would have been focused on Jamaica for all of these years within the government to bring on stream the new procurement of energy, RFP, right? You would have seen MPC, source capital across the region and deploy it into DOMREP, El Salvador, Costa Rica, Dominican Republic, through different joint venture partnerships like with Ansa Macal. So if it's an engineering so strong cash flow and you're able to actually take on some of these deals or these relationships through, a potential new large shareholder, then it goes well for everybody. Because I think that's one of the countries Twitter faces right now, in the sense that because there's no central control to anything of a shareholder, and that kind of preference towards Jamaica, they're not fully leveraging the potential that exists in other markets, because I know for a fact that once the US dollar is still green and their government or whichever entities buy energy from those IPPs is still paying for it, everybody wins. So
Okay. So I mean, I thought Matthew would have mentioned that changing the share structure as is well. That's probably is a short term thing that he's watching for, but sounds like he's more looking medium to long term. Anything to say about Wigton, Andre, before we move to David?
Truth be told, I think across the three of you guys,
Uh,
everything was discussed. But I think recent developments, Wicton is in fact on my watch list. Notable points would be changes to the share holder cap and the recent contracts that they would have gotten with at the airport. I guess things that I'd also note is the nature of the business. When the use of turbines, they probably incur a lot of, or they incur a lot of the depreciation charges, and as such, as those equipment are due or reach the end of their useful life, it requires a lot of cash in terms of getting new equipment. So I take note of that. I take note of also the volatility that can be associated with wind speed in terms of generating revenue. And I'm also just guided by the earnings performance. It would have probably displayed a little bit of volatility as it stands now. PE 30 times. I think it,
30.
it wasn't far. Yeah, I believe it wasn't far back when it was mostly at 10 times, and I'd have been wondering why it's such a trading at such a low PE. I guess at the time, sometimes what the market does is if the outlook for growth is limited, then that will be reflected in the PE. But
Yeah.
the reverse is also true.
Yeah.
So I guess just one thing. I mean, the outlook for Wicton is, pretty much interesting.
Yeah.
Earnings will have to keep pace. The short-term traders will become impatient, and you will see some selling pressures that could impact the
That,
long-term sellers. That could,
that's
exacerbate
that's
the selling pressures.
that's kind of what I'm expecting. To be honest, Andre, that because I'm watching to see how this upcoming milestone will fare for the stock. I feel like that same impatience that you mentioned, I think it'd be an interesting year for them. I do think that they'll get to or continue to see all-time highs from where they are right now. But it's very interesting to see what will happen after that milestone, what the trading will look like, because we have seen. Um, I couldn't find a way to phrase it, but that impatient short-term trading is what I'm what I what I have been seeing and what I think we might see, but we'll see. I'm not a shareholder. I'll just say that, but I am watching it as well. So
Yeah, and then also things to watch. Would be changes to the management team. I believe
yeah,
the current MD, is will be resigning shortly. So that's
they
something
mentioned
to watch. And
He
they said
retired
that
already.
yeah, man. I think he retired already end of March, right?
there you go.
Mm, yeah. All right, David, you're up.
So, my stock to watch is really A.S.Bren, subsidiary of Seprod. And the reason why I point them out in particular is it's a pretty interesting dynamic in the sense that with A.S.Bren, Seprod didn't have to spend, 100% of the money to recognize most of the economic benefits. They have a 54% stake in A.S.Bren and in turn benefit from, the exposure to the Eastern Caribbean while building up this super platform. And in the case of A.S.Bren, it's a significant concentration of ownership, you know, in terms of the shareholders. So the company would have been acquired by Separate in, I believe it would have been May 2022, listed in November 2020 on the JSE with listing by introduction. So in effect, you like at an IPO where persons could have come onto the market and sell their shares in a flurry as they see fit to get cash. It was very controlled. So you have a very tight ownership base in terms of AS Braden, which benefits the upside when potential investors want to actually take a position into that company. And the funny thing is, while it might be priced in Jamaican dollars and US dollars here on the JSC, and their dividends are quoted in TTD, their dividends are paid in US dollars. So that's one thing to note in particular. And then to continue that same track, we saw the article of Sunday in the Gleaner where Richard said that, they're looking to really leverage that position that AS Brady has in the Eastern Caribbean to really create a regional distribution platform to really grow that presence across multiple markets. And they acquired a business in Barbados, Stansfield, Scott, acquired that controlling interest. And, they do have that position to really benefit for further growth. And we would have seen recently whereby, in the case of Seprod, PB Scott is the chairman of Seprod, and we'd have seen whereby one of the Mustang entities would have purchased some shares in Seprod in January, which triggered a takeover bid. And one thing I kept always saying was, if they're this close to the takeover amount and they just did it no, it's not by accident. And in fact, you've
Say
also
more.
seen,
Say more. Say more.
and you
Where
and you've and you've
where you
also
think that's
seen
going?
And you've also seen whereby since they've acquired AS Braden, there has been a significant increase in terms of the dividend payments by Seprod. So they used to be paying 4.50, they're paying 6 cents now, and used to be semi-annual. They're paying like probably 3 times per year now in dividends. So the frequency has increased. You have this now majority controlled by the Mustang Group or PB related and PB basically, and you're talking about this regional platform that they're building up between Separate and AS Braden. So in the case of AS Braden, tight control, growing business, and just because of that nature, the share price has a lot more space to increase. So you see that $22 Jamaican 22 JMD trade as high as 44, 49. It's trading at $40, 38, $39 now, but end of the day, persons would have bought even at $30, they're effectively up probably 9 divided by 30, 30%.
Yeah.
So that is one perspective. And then in case of Separad, anything that A.S.Bren builds upon, flows back up to Separad's numbers. And there's a very interesting dynamic between Separad and A.S.Bren. But A.S.Bren just has that benefit of that tight control, basically. So I hope that makes some sense.
Yeah, it does. I mean, it is a company that I wouldn't say I'm watching closely. I've like a I'm watching it from afar. I'd say.
Jermaine, Separad has been what I'd call a bread staple stock for me. I can look forward to almost every month or every quarter end to have some bread from Separad.
Yeah, man. I remember when that was one of the first companies I would have invested in when they did
That offer for
$23
sale,
offer. Yeah, man.
$23.99.
And I would have sold at around $50. And actually, wasn't I wasn't very happy to have sold. Let me say it that way. But yeah, yeah, yeah. All right. Okay, so I'm up, I guess. But I will ask you guys before I continue. Please do take a minute to like the video. We have over 200 persons watching, and that's actually probably our highest numbers, but we have about 30 likes on the video. So please just take a minute to like the video on any platform you're watching from. So for me, I'm interested in, well, everybody knows I'm watching Trans Jamaica. Certainly waiting to see how things will settle after the recent dividend would have been paid. But in terms of other companies, I'm very interested recently in seeing how things develop for Tropical, all right? Because would have had Alexander on earlier this year, and just from the conversation we had, just from what we saw of this acquisition for Rose Batteries, I think that is going to be a significant increase in their revenues. I think it will be good for the business, and I think it's probably the start of more to come. Of course, after they would have settled in, gotten some quarters under their belt, etc. But I get the impression that they're looking to be at least in contention to acquire additional companies at least every couple of years. That's what I've been seeing from them. And of course, not every potential acquisition works out, but from the perspective that there seem to be intent on growing the business, right? Like so when I had that conversation with Alexander, it seems like he's trying to position the company to be in a different category in terms of revenues, different category in terms of profits and the dividends being paid. So I think this new company, especially if they're doing conservative to US standards, that may still be significant compared to what it would look like for Tropical's revenues now. So I'm curious to see how that plays out. And of course, they would have mentioned they're looking to raise capital to close out the transaction. We don't know what it will look like as yet. And I do think just some of the other things that would have been mentioned before in terms of opportunities for the energy sector. And I see where there may be some opportunities for them in terms of maybe from not just the provision of products, but maybe the servicing or recycling of the batteries that are used, etc. Just something there. I think there must be some sort of synergies or opportunities that they can form in terms of partnerships. And yeah, that's what I'll say for now. So any thoughts on Tropical or feedback from you guys?
So
Well, one of the things I would say is the same NHT points we spoke about, that NHT giving those low interest rate loans will likely help out Tropical a lot.
Yeah.
So, and what else for them? I'd say, yeah, I mean, I think that they will essentially benefit a lot from the increased renewable energy and stuff like that. The government, I think, will continue to give more incentives. We saw where, what, year before last, they reduced or moved the GCT on lithium ion batteries. And then that's where, Tropical is really deals with. So that was very good for them. And I mean, at that, yeah, I'm pretty. And oh, the other thing I should mention, I think it was your interview, Jermaine, with, was it Alexander Melville,
Yeah.
about when they had acquired Rose. He said that they are likely going to do an equity raise or a secondary offering to help with that acquisition. And I think
He
you
did
had
say that.
asked him the size of the raise, and he had said at the time there's even a chance technically that they may have to go to main market because of the
Yes.
amount of money they'd have to raise. But if you look at what happened recently, the junior market
I
limit
heard that
being
too.
raised,
Exactly.
that could be
You
very
know,
beneficial for them.
when that article came out, as in the notice, I sent it to a bunch of CEOs that I've been having frequent conversations with. And so that may give them more options in terms of how they seek to raise money. Because we've seen a few companies, Paramount, Fosrich, issue bonds to raise capital. And I believe if they had the opportunity to get additional equity, maybe they wouldn't take up the bond option, right? So, yeah.
Okay, even Fostridge did a rights issue, what, late last
August
year?
2023.
Yeah,
Yeah.
if the junior market limit had been raised, maybe because I mean the amount of
Exactly.
money that they had, it was a very, I don't know
Yeah,
if
it's
you
like
guys remember
a
the
hundred
exact
and
amount.
something. Yeah, as
Yeah, it's
nothing.
very
But
tiny.
yeah, man.
So,
So
so
yeah.
And that, if you remember, that's what Jeremy Barnes had said. The reason why they're not issuing dividends for FESCO is because of that same cap. So maybe they will raise capital soon as well.
Jermaine, remember that FESCO is also in the growth stage with respect to LPGs. So that
Yep.
is why
I
you
thought
heard
about
him.
them as well.
Yeah, so that's why you mentioned that we're redirecting capital towards that great opportunity.
Yeah.
But really, Tropical. So just for context, in that same interview with Alexander, he mentioned that Rose is quite, big relative to Tropical's own size, and the reason for the equity raise is to really deleverage the transaction. So the deal would have already been concluded, in terms of the acquisition, but in this case, it's really just to reduce the debt associated with in terms of completing that whole deal, and by reducing the debt, it gives them more space to potentially raise new, cheaper debt if needed for, other deals in the future.
Yeah.
And then to give further perspective to that whole situation and dynamic, you know, even with the junior market going to $750 million, it still comes on the end of the day how much does this company actually need and where are they in their tax break cycle. And let me tell you why I say that. So in the case of MFS, they really don't have any material benefit to staying on the junior market. And let me tell you why I say that. MFS should have been C2W, which I said back in 2012. That was more than 10 years ago. The tax break is over. And you have a couple of companies which are in that similar position whereby look at the tax break has basically fully ended. For them selling the junior market is at this point more so about just spending the same listing fees and not facing any fines for breaching any rules. So for example, Nusset Express, their tax break officially ended on January 14. So they're paying the full 25% income tax rate right now. And you have other companies, for example, like your Mail Pack, your Lab, your Lumber Depot, all listed back in 2019. So they're going to be paying 50% of normal rate right now. So some of these companies, depending where they're in their cycle, it might make sense for them to raise that additional equity and go to main market. But for others, that it just might still be lucrative enough for them to stay on the junior market and stay within the confines of the $750 million limit that is being proposed. So it all
Yeah.
comes down to the dynamics of that of everything. Because I point to Jermaine, Fastwitch, for example, they listed in 2017. They have another 3 years in effect of being, 50% tax remission basically. For
Yeah.
them to basically surrender that, opportunity, it means that they would really need to have some level of deal that makes
Remember,
it
they're
to
building
move.
that super center. Yeah, man.
Well,
Man.
then they say them. Remember that they're probably going to outfit it internally, but the property itself is likely, based on what I can last recall, either the land or the building itself is going to be owned by GK's pension
Yeah,
fund.
man. Yeah, man. Yeah, man. That's what he had said
And then,
for until like 2060 something or something like that.
yeah, basically like a 1-3 where you just occupy the property, pay your lease, and you eventually own it in effect at the end. And
Yeah.
I just saw Philip mention about the whole dream market cap in terms of MFS. So yeah, that is a valid point. I agree. But as in the case of MFS, other companies might not have that same uh, personal constraint to staying on the junior market to list another subsidiary in the future. It all comes down to different situations.
Yeah, man. Got you. Matthew, well, Andre, we're gonna skip you because Matthew may have to drop soon. So Matthew, the next one.
Right.
Yeah, so my other pick is an old, I guess, fan favorite, Jamaican teas. What I would say
Whoa, whoa,
about
whoa,
Jamaican,
whoa, whoa, whoa. When you say fan favorite, who are you talking about really?
I'd say the whole market, like you don't remember Jam Tea back in, what was that,
Summer?
2022?
Summer?
Yeah, the first
Summer
summer,
22?
the first part of the endless summer.
Yeah.
Uh, but yeah, so I mean, Jamaican teas, it's I mean, if you just look at the company, how it has grown since it listed, it has grown significantly. A lot of people really liked Jamaican teas a few years back when they said that they were going to essentially spin off their manufacturing arm, because if you know what Jamaican teas, they have real estate, they have stocks, QWI, and then they have stocks, which is QWI, and then they have their manufacturing arm. But then, if you look at sometimes QWI and how the portfolio can hit them sometimes, and then also in the real estate, they have not had very good luck in real estate over their last several projects. So people like the idea of the manufacturing arm, because the manufacturing arm is their core business, their bread and butter. But, you're sometimes hit with those losses or those things from the other sides of the business. So the fact that they were going to spin off the manufacturing arm, give you an opportunity to own just the manufacturing arm, raise some money, and then use that money to even fund some other expansion activities. People really liked it back in the day, but they had a lot of delays. It's been essentially about 2 years, I guess. I think it's probably 2 years or so, or maybe even more. But what I would say is that if you look at it, like the stock price coming from where it was back then, the stock at that time was like $4, and now it's like what, $2, maybe $2.50. But some of the things that they have been doing as a business, they've grown a lot since. So for example, they have new distributors. So Wisinko is now their distributor in Jamaica, I think since November or October last year. Wisinko is essentially one of the best, if not the biggest or best distributor in Jamaica. They also have a new distributor in Trinidad and Semakal. Also, before they had a lot of inefficiencies in their business, they had essentially two factories. One of them was at the teas, one of them was the soups. There were two separate locations. They had to do a lot of, essentially you're paying, costs for those different factories, electricity. You have to distribute between them. Things like it's a lot of work having those two separate areas. But they bought a factory, a larger factory than they had before. So I think before they had maybe 20,000 at one factory and then 10,000 square feet at another. The new factory they bought, if I'm not correct, I think it is maybe 50 or 60,000. So there's a big jump in the size of that factory space, which I think is going to give them a lot of room to be able to manufacture more, especially setting up these new distributors. And it's going to also help to reduce their costs. Instead of having those two separate factories, they're going to have that one factory that they're going to be able to own. Also, they are now getting out of the real estate business. They have said that last real estate project that they are just selling off some of the properties, that's going to be their last real estate project. And they're going to focus more on their core business. So I think for some of those reasons, Jamty will be interesting. I'm not sure exactly how they will spin off the business. It could be that they give you a certain amount of shares in Caribbean Dreams Food for a percentage of shares that you own in Jamaican Tea. So maybe for every 10 Jamaican Tea shares, you get one Caribbean Dream shares. I don't know. But they have a AGM coming up. So I guess we can, if you're a shareholder or just someone who wants to attend, you can maybe ask them those questions, see what they say. But for some of those reasons, I think Jamaican teas is a stock to watch.
All right. So I say Lenworth challenging your Wisynco is the best distributor in Jamaica. So you might have a context to that you may want to add. And Roswell is asking when the spin-off is happening. So I told them summer, and it may be a part of Vision 2030. So you never know. But
So
yeah.
to give some context, right? So basically, what you have to remember, and it's something that the average person won't appreciate. Basically, Jamaican teas got licenses, and even though they are moving the operations from company A to company which they still control, in the eyes of, let us say, your Tetley Tea or the Tata based entity in the UK that has the legal license and everything, you're a new company, we have to go through the whole process again to transfer and everything. And even in the case of the FDA, they had to come and recertify the same location, even though nothing has changed. So, those are things that they couldn't control. And, I believe it was last November when I spoke to John Mahfood when they announced the whole Wisynco Antimacal, switch. He said that, they're going to spin off this subsidiary. Well, effectively transfer everything by a particular time. Give it about 6 months to run, and then consider, listing it at that point. So what Jamaican Tea has effectively become is a holding company, and most people realized it. So remember, Jamaican Teas started mainly in teas. They added different, manufactured products to their portfolio line, and they said, all right, we got KIW, we got the stock portfolio. Spent off into QWI, raise some equity, maintain control, we have a large portfolio to play with. We have the manufacturing business, spent off into a different company, list it, still maintain control, have this capital to do something else. So, it creates a multitude of opportunities, not just for the directors, but also for the shareholders, because in KWI's IPO, if you're a JAMT shareholder, you got the shares at a discount everybody else. Then you also had the situation arising from, the fact that, let's just say JAMT maintains 51% of Caribbean Dream Foods. They can take that same money that they used in terms of selling to the market in Caribbean Dream Foods to buy another manufacturer. So, and look at their holding company, Jamaican Teas in effect, would have less income tax, less costs, So what that could have potentially result in is the company potentially switching to a capital distribution model, like a Jamaica Producers or a Blue Power, which means you pay probably 2% in withholding tax versus the 15% that you currently pay when the dividend is paid. So just some food for thought, basically. And the reality is, even if someone disagrees that Wisynco is the best distributor in Jamaica, the reality is Wisynco has a very powerful reach. Like, you just can't underestimate that. They're planning to build a location in terms of logistics warehouse in the south coast, like along St. Elizabeth, the Carnan Belt. They have one in Trelawney, and they just mentioned how more than 20,000 SKUs they have. They have Jamaica Producers, St. Mary banana chips, they have True Juice. And the thing is, the more they keep adding to this portfolio, the more attractive it becomes for potential clients to just say, hey, let me just get these goods that Wisynco is offered alongside everything else that they're currently under their umbrella. So Matthew's in a discussion about Jamaican teas is a very plausible discussion, because what could potentially happen is like back in 2019 when it was KWI's IPO. But comes out, you see the big, Jam T shareholder by this record date, and you let the stock price halt up, and you can potentially be someone that's smart, take a smart exit, keep a share, be a shareholder on record for the discounted pool if it's available, but at the same time you get to buy back into Jam TV so desire at a cheaper price. Some people did.
Yeah, I mean, I was one of those persons looking forward to summer, and I think I just kind of moved on. Honestly, I watched it a lot closer, 2019, 2020 thereabout. Haven't really looked at it closely, so I can't add anything really. Actually, do need to have an interview with the oh my gosh, and I need to have an interview with
John
him.
Mahfood?
Yeah, man. I got his number
Yes, please. Yes,
at
please.
JMEA's Expo last year. So it's a year now. I have his number in my phone. I haven't called him yet. So I'll try and get an interview this year. But yeah, I'd love to hear what they've been up to and
So wait,
see
so
what.
Jermaine, the reason you were interested in them at the time was because of the spin-off?
At the time, I honestly not sure because I knew I was a shareholder. I knew when I spoke to David, he said the same thing. He just said, hold on to one share. So I remember in my J Trader for months, I just saw one share of Jam Tea, and then at one point I'm like, let me just put that up because the one share was bugging me. And but yeah, I was kind of anticipating something around that summer timeline.
What I
And
would say though, the FSC, I think they changed the rules on preferential pricing. Like I think it's only employees and associated persons can get preferential pricing.
There put
So
out
I'm not
guidelines, Matthew, but they never officiated anything to the public. Some issuers, just took what FSC put as gospel, but what we've seen in the last year and a half and the original report kind of shows us that FSC is all over the place because, Signals had their offer and there is preferential pricing. But, either though differential price, there can still be a reserve pool for JMT shareholders.
yeah, because sometimes the price is not the issue, but the volume that you can get.
So at the end of the day, it can still work out in the sense that if you're a shareholder by X date, you do benefit from being in a reserve pool and not being thrown into the rest of the general public.
Even though Matthew might just buy out the whole pool anyway, so that reserve pool may not matter.
What I would also say is that to David's point, David gave an interesting timeline. He had, I think John Mahfood had said they wanted to run the company for a certain amount of months. They transferred the assets January 1, right? What month they were now in April. So, that could be somewhat of a timeline. I mean, at the end of the day, you never know. There can always be delays, but if you're keeping up with it, that's a possible
Brian said
timeline.
some are gone and coming back. So I mean, with the heat we're feeling, summer might be close. So we'll see. Andre, you're up. Let me pause before you go. Yeah, hold on. Guys, can you please take a minute to like the video? We're really supposed to stop at 8, and I said I'd go further if it is we had 100 likes. We're at 58 now. Please take a minute to like the video. It greatly helps us. So I just wanted to say that. Andre, go ahead.
Yeah, not much to say on Jam Tea. I know that I guess the only thing I know that the whole substantial exposure to QWI incorporated in the income statement, and I think the way it's classified is through profit and loss. I know that when the market, I mean, while QWI has exposure to US market and that market has been doing very well, I recall at times when all the markets weren't doing well, that would have eroded the revenues and the earnings from JAMT's core business. So that classification is somewhat of a double-edged sword. Outside of that, not much to say on JAMT.
All right, cool. You want to go ahead with your next pick?
All right, so my next pick is pretty much Honeybun. Where Honeybun is concerned, they would have alluded that the time has come for them to effectively look towards increasing their production capacity. They're looking in terms of expanding by way of having a production facility, I believe, at Angel St. Catherine, conveniently located. With that being said, they pretty much anticipate that expansion in the production capacity will allow them to actually be able to readily satisfy the local market, being Jamaica, and even look to the ways of imports. Also, that expansion will allow them to, pretty much expand their product offerings. And, one of the hit products, shorty bread, for anyone who, don't eat a lot of bread, person who lives alone, that's a nice little compact size, and that would have done well on the market. So, yeah, pretty much looking to see how the expansion will benefit them. Should be, I think they announced that it should be completed within the next 10 months. I think that the balance sheet definitely can support the very low debt. So should they need to raise debt, it will be easy, or if they can finance that build out in and of their own. Outside of that, profitability is up on a year-over-year basis by ways of the audited financial statements for September 2023. And yeah, pretty much it's a very good company in the manufacturing space. It's smaller than the giants, being your Grace, Kennedy, your Wisynco, your Separate, and the works. But I'm watching Honeyball.
All right, guys, anything to add? I think
So
yeah, go ahead, David.
so Honeybun is one of those, interesting realities in the sense that basically they reach at inflection point similar to Wisynco, and what a lot of other manufacturing companies have realized, which is, hey, Jamaica is great, overseas is great, but we don't have any space. Wisynco they spend 20 to between 20 to 40 million US. That's something similar with like a Pepsi. So you're seeing that in the case of Honeybun, they're like, yeah, this little space in Kingston, it was great for the last 40 years, but yeah, we need to grow again. So you might just see a little bit of a immediate slowdown in terms of that transition period, but when they do kick up into second gear with that new space and expansion, it's a whole different ballgame. Because one thing that you have to look at, actually is pretty interesting, is because Honeybun is going to Angels, I believe that's the rest of they're going to be, they are next to the North South Highway. So it's really not very difficult for them to just jump on the highway and get to the port and just send those products overseas. It's not hard for them to just, get onto Highway 2000 East West, which is TJH, and go along Clarendon route. So the other synergies that come.
You should use TJH as much as possible.
I didn't try that, Jeremy. I'm being very honest. That would just me being very direct and transparent. So, continuing that same point, basically, by a Honeybun moving to Angels, by a Jamaica team moving to Temple Hall, all these companies are saying, hey, we see the runway, we see the path, but we need the space. And some of these moves or expansions are in particular vicinities and areas that do augur well in terms of the next level of growth, basically. Because it's not necessarily the fact that our companies are not good at what they do, it's that they build and keep building and building in one particular space, but they reach that breaking point in terms of capacity. There's only so much you can produce in terms of a business before you just reach an inflection point where you can no longer produce anymore. You can try putting in more efficiencies as best as you can, but otherwise there's just no more efficiencies to extract. So basically, good stock to look at in terms of, as Andre pointed out, stock price is kind of trending back, to relative pre-COVID levels. It's been kind of depressed below $7 for most of the time, but well, in 2022, I believe it was at $8, $9, as high as 10, 11. So it's trending back up a little bit, but otherwise speaking, the company literally almost debt free, whole heap of cash, and a very strong brand in turn. And the reality is, the manufacturing companies like your Wisynco, your Alaska, and so forth, as long as they're seeing the domestic sales continue to grow, alongside the opportunities in the international markets, you're going to see more expansion and more growth in them. So those are my 2 cents.
Okay. I mean, I like the company. I have great respect for the CEO. I think they're solid. I'm always curious to see what expansions do to a company. For example, as waiting on the expansion for Fontana, seeing what that looks like, and what I've learned, or just not just from Fontana, but some of the other companies I've been looking at in terms of expansion and growth. There is some one, I'm just learning this in business in general. It always takes longer than you think and costs more than you think, right? Just something that I've learned. And we saw that, for example, with RPL as well, in terms of, you know, the timelines they would have stated, and just things happen, right? And so I'm curious to see what this expansion looks like. Check out that interview that Michelle Chung did with Kalila on taking stock, that just yesterday. I thought it was a very insightful interview. And so it's not a company I'm watching yet, but it's something that I'd love to see how things progress for them. And yeah, that's what I'll say for them for now. David, you're up next in terms of your.
So I guess it should be the final basic, you know, company to discuss. So, you know, right now, there are two companies I want to discuss, but I'll mention them, but I'll just give my very brief overview for each of them. So basically, we have Scotia Group, and we have Lasco Manufacturing. Why do I say those two? In the case of Scotia Group, they're just in the prime time of their life, in the sense that their interest cost is literally less than 3 cents of every dollar they bring in. Can you meet my for a second, Andre? Yeah, so I was pointing out that, you know, in the case of Scotia Group, they, you know, are benefiting just from that cheap, you know, deposit flow they have, you know, which keeps the interest costs low. With rates being high as they are right now, they're benefiting from lending at higher rates, which, you know, means high interest income, still maintaining very high operational efficiency. And in turn, you know, you've seen whereby the market has taken a shift towards quality versus, you know, narrative, as you mentioned earlier, Jermaine. So in the case of Scotia, you know, back in December before their Q4 report came out, it was trading at $33. It's trading at $47 right now, which is, you know, almost back to their late 2019 to early 2020 price before the pandemic really crushed prices. So that's one, you know, company to look at in a sense. They're not looking to expand overseas or anything like that, but at the same time, they are doing pretty well with what they do have on hand. Then with Alaska Manufacturing, you know, their price is likely going to get the exposure that somewhat was constrained and being in the junior market. So let me tell you why I say that. So for those who don't know, you have some brokers who have disdain for the junior market. It might be a great source or way to, you know, grow companies, which is great for Jamaica overall. But in terms of risk allocation and all that, some of these funds say, hey, we like these companies, but wrong market. So you could always say, yeah, Tivoli Gardens, and the police officer says, hey, sorry, wrong gardens. But if you call and say Cherry Gardens, the police reach same time, that's kind of the analogy to reflect, you know, Alaska Manufacturing in a sense. So
interesting. You know, I was at the ceremony, the graduation ceremony, and it's interesting. It seemed to have been very important for them to have that graduation. There was talk about, you know, they're moving to the big leagues now and stuff like that. So everybody in the room was very high on the fact that they were making that move. Actually do have an interview with James this Friday. Hopefully it works out. But it seems to me that there are some companies on the junior market that seem like they are seemingly want to position themselves for a move to the main market at some point. So I never looked at it that way, but very, very interesting analogy there. So yeah.
So the thing is, that's something you're going to always hear publicly, but you just have some fund managers that don't have that preference for junior market stocks for different reasons. So
have you seen that, Andre? Have you seen that?
Yeah, because, you know, for example, some investable amounts by, you know, large institutional clients, you know, you have various guidelines that you have to abide by, and then for
Ah,
example, you don't want to invest certain amount. You don't want to go beyond a certain amount of ownership in a company, and then if that amount is really a small amount to your funds under management, you probably look to the bigger companies. It's much less risk and so on and so forth. So there is more of the bigger funds, the pension funds and all the works tend to prioritize the larger companies being the main market companies.
okay, fair enough.
So basically, even though Lasco is that giant in its own regard, because they're the largest company on the junior market in terms of market cap and by a profitability before they move to the main market. But you have
Did they do a stock split at one point?
all three Lasco companies did a stock split at the same time. They did a 10-to-1 stock split. So they all listed at $2 per share, had a 10-to-1 stock split by 2012, 2013. And until I brought the original IV price down to 20 cents. And we're seeing where Lasco manufactures at $5.15 and Lasco distributors at around $4.80. So I hope that makes some sense. And
Gotcha.
I just saw the next comment. And while I get the idea of that one general holding company, I think it works better when the companies are separate.
Yeah, man, they want them separate. For
No,
when I saw them at the ceremony, they want them separate.
I was
Specifically.
about to point out that those different companies have different intangible benefits. Whereas with Lasco manufacturing distributors, you're seeing double-digit ROE, growing profitability. Lasco financial will be a drag on their earnings, and at the same time, it could potentially create some level of regulatory hurdle, to say the least. So, there are certain constraints that come with creating those amalgamated holding companies on the market. There are some constraints, and it all comes down to different factors. But I hope the persons understand that context I'm making in terms of Lasco manufacturing.
Yeah.
So,
Yeah, man.
Yeah, just to add to that, I mean, I think there was a time when the conglomerates is what would be listed, i.e. through holding companies and so forth. But I think the current times pretty much shows a lot of companies essentially prefer and are opting to have various the different segments being listed individually, because as David alluded to, when it's amalgamated, the performance of one could drag down the overall or the look of the performance of the broader group, and it kind of hinders in terms of the share price movement. So sometimes there's a little bit more efficiencies to be had when you have companies, the different segments listed. We see the case most recently with GE, General Electric. I believe they have the pharmaceuticals listed separately from the other segments. I believe one is the aeronauticals and
medical.
So yeah. So pretty much it's not it's a strategy that's actively pursued by where you see the to have companies listed separately as opposed to the broader group.
Okay. So I think we're back to you, Andre, for your final, or is it my turn? I don't remember. How
It's
many
you,
companies have
Jermaine.
I-
You're the
You
last
see,
one.
you can go ahead, Julian.
You're the last one for the night.
Okay. All right. So I'd probably say so here's the thing. I know that I've actually seen try and mention it. I'm actually expecting, so this is the quarter that we wanted to see, not this quarter, the next quarter we wanted to see for RPL, right? Because as you guys know, they completed the long awaited stations that were pending, and they are finishing the one on Spanish Town Road. And I think this would be, I mean, of course, everybody kind of feels like, well, some persons, not everybody, some persons have mentioned their thoughts on the fact that maybe they took too long to deliver. I say that, you want to look at where the company is. They're literally building, or the way that I look at them is what maybe so we always tend to kind of compare them to maybe FESCO in the sense that FESCO now has 21 stations, RPL now has 3. So if Fisco would have listed at the stage that RPL is at now, it would have been a completely different perspective, I think. So I do think that this is a year to watch RPL definitely. I think that we will see what the three stations are able to generate. I think that they've been figuring things out in terms of adjusting to the junior market. And one of the things I appreciate with a company like RPL, it would have been adjusting to the junior market, and you get that sentiment from Andrew when he does the earnings calls, like and you see it on the report. Some of the things they've mentioned they've had to adjust to. Persons may not be aware, when you list on the market, there are fees, there are costs associated with listing. It's not something that's free for companies to do, right? So some of that would have been, of course, a factor in terms of their expenses. But I do think that we'll start to see some separation in terms of those margins finally increasing for them in terms of profitability. Based on the fact that they would have completed. And I do think that there are opportunities that it sounds like maybe they would have put on hold just to focus on the completion of the gas stations, which means if it's completed, we may start to hear about some other opportunities in the short term. I can't say anything else right now because of how closely I do work with them, I'd say. Yeah, but Ryan, that's a good point, right? So that's going to be very, very important. So it's not the same model with Fesco where you might have some dealer owned, some company owned, etc., etc. RPL owns everything. That's actually an important point. They do have the GK debt to clear, but I imagine that they'll have their opportunities to decide on what to do with that, especially now that they may be able to raise more capital because of the same junior market cap. So I do think that this year, specifically the rest of this year, is the time to watch for RPL. And I think that they'll have a good year in more than one, in more ways than one, right? So yeah, any thoughts on RPL, Andre?
Yeah, RPL is an interesting one, and given where they are now in terms of the the build out of the gas station, one in Negril and the one that's being done in Spanish Town Road. I think the outlook for them hasn't changed. It's always been the same, but in terms of where they are at now, they are much closer to the finish line. I won't speak too much where RPL is.
Yeah, I know, because it's kind of weird, right? Because GK brought them, you probably yeah, it's kind of hard for me as well in similar way, but I'll always try to use publicly available information and not so nobody can accuse me of bias or having information that is not public knowledge, right? So David had to take a moment. What I wanted to do was kind of wait here to see if anybody has any questions. I think there was a conversation around QWI. Andre, I don't know if you've looked at them. Any thoughts on QWI?
I know that. I think looking briefly at the chat, the part, viewers would, as we were discussing in terms of the US holdings so the US, I think the bulk of their holdings would actually be J dollar denominated stocks, but you know that in terms of the US market, that market has been performing very well. It's trading for now. It's trading at pretty much, a lot of things has been priced into that market. The breakthrough technology being artificial intelligence and the anticipation of rate cuts. That would have been significantly influenced by the tone of Fed Chair Jerome Powell. So that has, investors, they've been flocking into the market. And, there's always been this buy dip mentality. And I think out of that, there are a lot of distribution channels in terms of how people are able to get access to the market. Nowadays, you have, information is spread much more easily. Information about the markets can be learned during, productive sessions, even during our leisure sessions, just by looking at social media. A lot of broker platforms are accessible to, pretty much anyone and anyone, easy to join. You have the, continued build out of ETFs. So that all of that has been, avenues for which money would be going into the market, and that would result in much greater passive investing. So that market has just been benefiting very much from it. But it's currently at all-time highs. A lot of stocks currently at all-time highs. Much of the performance driven by the Magnificent Seven, notably Nvidia, Meta, Microsoft. You know, Earnings season for Q1 is, pretty much upon us. I believe the bank's supposed to be the first to report earnings, JP Morgan and all likes come Friday thereabout. So pretty much all of that data, we'd have to be guided by that. But not to digress, QWI, that small portion of the holdings do benefit from that, but the bulk of the holdings would still be the J dollar or the JC listed stocks, and our market is still in bearish territory. So pretty much my 2 cents. Thank you.
Yeah, so maybe it would actually benefit them to change some of that weighting. If they had done that, maybe they would fare a lot better. I mean, Philip was saying that as well, I think, or was trying saying that they're not really weighted in the US on the US side. But yeah, I mean, I remember.
I think right. I think I can, understandably so. I think that market can at times be very volatile, because I think it's always a tug and pull war between your technical traders, your fundamental investors, your hedge funds, and your retail investors, your meme stock investing, and then that market is very volatile to not just the performance of the listed companies, but macro variables. It's much more proactive, where ours is a little bit more reactive.
Yeah. So I see someone saying here that it's Gregory, welcome. It's very competitive for RPL in the grill. I've always thought it's competitive overall. Like, I don't think I've ever gone a month driving and I don't see a new gas station. It's a ridiculously competitive landscape. But I've seen, again, that this is the way I look at them. That if we look at what Fesco has been able to do with the number of gas stations that they have, eventually you have to assume that RPL is gonna at least get to a point where they have 5, 10, maybe more gas stations, as companies maybe exit the space, as persons maybe have land or opportunities. Let's say that new developments come into certain areas and they're able to get those opportunities. Yeah, I've been seeing the Yardman gas station as well. I don't know who owns it, but it's just a very, very competitive space. And so when I saw Fesco to 500 million, I'm like, if they're in such a competitive space and they're still able to do that level of profits, I still think that it just comes down to a numbers game, comes down to location and just volume, right? So RPL did mention that they tried to make their prices competitive. I wonder if that will still remain the same, because as they maybe try to get a little bit more margins, they might have to adjust that a little bit. But yeah.
Definitely agree. Competitive land space, dominated by the foreign companies, and I think it really boils down to strategic locations that bring about great convenience.
Yeah.
And then
Yeah.
I think once you have that determines your pricing as well as your margins, and then there's always the added benefit of having your convenience stores at the same time, and other
Exactly. Yeah. So I mean that if they should, for example, be able to get a gas station right near a new development where let's say they're putting 500 apartments or something like that, that may bode very well for them, right? So those are things that they might have opportunities for. So because the landscape is competitive doesn't mean everybody can't benefit, right? It's probably $1 trillion industry in Jamaica, with just the number of fuel that is used, right? So yeah. So Devon, I don't know. I'm waiting to see where they are at the next earnings call. And as I said, I really think that the update for the Spanish Town gas station, we haven't seen an announcement yet. That means it's probably not completed, but we did hear Q1, Q2, I believe. And so they're certainly on my watch list, and I'm waiting to see how the year fares out for them. I wanted to just there's one other company I saw persons asking about that I wanted to mention. I don't think you could speak about GK, right? Andre, GK would be. But CPJ, I saw somebody mention them today in our Telegram group, or was it yesterday? Any thoughts on CPJ?
Funny enough, the CPJ all-time highs would have been 21. Now it's at the $8, $9 region. I think they push they have a lot. They've increased their focus a little bit to cost containment.
Yeah.
Which I think is the right way that will ultimately allow for more to flow to their bottom line. I guess debatably, I could probably, my opinion is that it's somewhat oversold. So I
Definitely
mean,
think so.
come again.
Yes, I definitely think so. Our thoughts are the last time I looked at it.
Yeah, definitely oversold. And yeah, I mean, they're a strong player in a very important sector in Jamaica. So very important company, and definitely one to watch.
Okay. Can you say anything about, well, I know this is not your era. Maybe it's best to ask Ryan this, but anything that you're hearing in the pipeline for maybe opportunities for listings for this year? Because I noticed what they did at start of 2023, they're like 14 IPOs this year, blah, blah, blah. We didn't say anything like that for this year.
Yeah. So I mean, everybody would, you're guided by the performance of the market and the overall sentiment for the market. And as it stands now, our market, to be told, I will speak to pipeline or the broader market, but I know that one of the factors that's being considered is the performance of the market. I mean, based on your pricing, for obvious reasons, companies wouldn't deem it prudent to sell their shares at much lower valuations than they would deem to be fair, especially the levels that we would be used to, as well as the looking ahead. So given that it's a broad expectation that rates have peaked, so the topic of conversation right now is when will rates start to decline. That's really up in the air. But I think one thing that could be considered to be the general consensus is that rates will likely remain elevated, and the days of 50 basis points overnight policy rate is very likely to be a thing of the past. I think when we do see some rate cuts and and the normalization of the rates following that, it probably won't be at that 50 basis points level where the BOJ benchmark overnight policy rate is concerned. So nonetheless, there's the anticipation that rates will eventually fall. There's the timing that's pretty much unsure. So, I think the management teams of companies looking to list will be guided by that. Before or not too long ago, there were talks of multiple companies to be listed. A lot of time would have passed. So, it seems that those talks would have stalled, or the management team would strategically decide to, delay those listings for now. So pretty much I think what we look forward to would be, for example, the case of the listings that will be done by the government. For the longest while, would have heard about JPS.
The infrastructure ones.
So the pipeline ones. So JPS, I know they've spoken multiple times of JPS being in the pipeline. And I know that I think Jamaica Mortgage Bank seems to be very far advanced, where I believe they had an advertisement in the papers, inviting bids for brokers to pretty much spearhead that process. So that's probably one that I know that Finance Minister Dr. Nigel Clark would have alluded to that pretty much being realized over, the short term, maybe within a year or so. So we just have to watch and see if that one materializes.
Yeah. And I got wind of at the energy renaming ceremony. I need to hear that interview, by the way. It's a good thing I just mentioned it. Sometimes I'll do these interviews and forget that I have done them. But I did an interview with Nigel Davey at their renaming ceremony, and so there may be something coming for them this year in terms of equity raise. It would appear, and I do think that something is coming for a few companies. I'll just say that persons should note when we do an interview with with CEOs on our channel. I'll just say that because especially the junior market companies, a lot of them are looking for capital and don't think that the interviews are always by accident, right? So that's all I can say for now as well, because of course I'm bound to okay, perfect. Yes, Tavares, thank you. Because sometimes I don't say anything because I don't know if something should be private or public.
Yeah.
So I usually let the interviews speak for itself. But yeah, man, I figure since I was there, media was there, it's not private, at least that piece of information. So yeah, so I do expect something from them. But yeah, I think that's it. So anything to close out, Andre? Any final thoughts for wrap up?
As it stands now, I mean, it's the stock market that the episode will be about, and you asked about IPOs, but I know that from my point of view, I mean, it's really debt that I've been seeing a lot of companies being raised, a lot of corporate bond offers, and you know, even for the longest while, it's most of the corporate bonds would have been exempt distribution, where mainly offered to accredited investors or minimum purchase investors, where the standards that define those are specifically defined. But now, as I said, when debt becomes due for maturity and companies have expansion plans and up to go, capital has to be raised, and that's pretty much just a feature of the financial market. So as it stands now, I've mostly been seeing corporate bonds, double digits in the double digit regions, for the blue chip companies and so on and so forth. But I think notwithstanding, like our market, a lot of companies are undervalued. So really and truly, if just to choose 3 stocks is a task, because there's multiple companies that have been oversold, that are undervalued. Their financial performance has been doing much better than their stock performance,
Agreed.
strong balance sheets, and all the work. So now is the time. It's during times like these that you have a movement of wealth, where wealth can be created. So a buy and hold approach still stands, and it's definitely one that a lot of Jamaican investors can benefit from. Speak to your financial advisor. So,
Of course, of course.
yeah.
Fully agreed. Fully agreed. Thanks so much, Andre. Thanks, David, Matthew. So Andre, I mean, persons can find you on social media, LinkedIn, Twitter. That's fine. Andre is no stranger to the channel, so I'll put everybody's contact in the description. So thank you so much, Andre. I'll see you soon.
All right, great. Thanks, Jimmy. Thanks for having me again.
All right, guys, so I'm going to just mention a couple of things before we close out. So thanks to everybody for being here. Thanks everybody for 10K subscribers here on YouTube. We surpassed 10K recently. We're supposed to be having a subscriber giveaway. We just need to plan it. And so we're working that out right now. We do have our investment class coming up this Saturday. So we do have, let me share that. Well, am I not sharing it properly? Okay, so I'm not sharing it properly, but we have an investment class coming up this Saturday at 7 p.m. So be sure to sign up. It's classes.learngrowinvestclub.com. Once you sign up, you'll get the link to join the session, and we'll actually be talking about investing in the US markets. So please be sure to check that out. Let me share the flyer just quickly so you can see that. All right. So I want to thank my guests again. Thanks everybody for being a part of this community. I think this is the most persons we've had online in a very long time. Thanks, guys, for all the comments. It really does mean a lot to us. We want to get back to these type of conversations a lot more. So really do appreciate the turnout. For me, did I give my final pick? Yes, I did. Some other companies I'll look at, I'll just kind of round out the hour. I am looking at Dolphin Cove. I think that's an interesting company. I just got my dividend payment, so very happy with Dolphin Cove. It was somebody who pointed them out as a stock that they were watching sometime last year. And when I looked at the company, looked at the dividend yield, looked at how things were for them, it's just an interesting company to watch. And they're not on my watch list currently, and that's because I simply don't know anything outside of what's public for them, if that makes sense. Because usually there's a trigger for something to be on the watch list, right? So, but it is a company that I think is quite interesting in terms of the potential. It doesn't trade at a lot of volume, so I think that's a very interesting thing about the company. Meaning, I think they're definitely due for a split would increase the liquidity of that company. Maybe we'll see more trading. But some days I'm looking at the queue, maybe 100 shares, 1,000 shares, 2,000 shares. So it's very hard to get volumes that you're looking for. It's also very hard to sell, which traditionally, one of the things I look at for a company, and Orville, you may remember this, let me know if you do. I remember when Fosrich was similar in terms of liquidity. Like you couldn't get Fosrich shares. I remember when I was buying Fosrich around $8 back in, I think, 2021. I left my order in the queue for multiple days for a couple thousand units before it got filled, right? So it wasn't seeing a lot of volume. Then it made its way all the way to $40. We know the stock split. We know the APO since then. Well, the rights issue. So a lot more shares available, of course, now. But back then it was a little bit difficult to get shares. So, well, not that it was difficult to get shares, but there wasn't a lot of volume being traded for Fosrich specifically, right? So I see Dolphin Cove in a similar way now. And I just think that it's a good opportunity for them. If it is that the management is interested in that stuff, I've never visited an AGM. I look forward to doing that this year. Whenever it's announced. David, I know you're backstage. Let me know when Dolphin Cove's AGM is going to be. I'd love to attend that. Another company that I'm looking at would be let me check my portfolio real quick. Let me see what David is saying. Annual report pending. Okay, we'll find out soon. Okay, so it's not confirmed yet. So we'll find out. Somebody was asking about One Great Studio, I think. So am I watching One Great Studio right now? So I'd say I was hoping to kind of get some more context to read the company. I was hoping for some more context around the what's happening with One Great Studio, but there was no earnings call recently, so I'll wait for some more information on that. Meaning I was hoping to see what the projection was for high voltage, right? Because high voltage to me seems to be one of the key selling points for the company, right? Meaning that's the big acquisition that was positioned for IPO. I see that market as a great opportunity for them. Some of the territories that the CEO mentioned that they're looking to move to. And so I was hoping to see that, well, I was hoping to be able to hear more from them, right? I'm not sure that's going to happen, but I would love to know, like, get a clear outlay for what HV SEO would look like what they have been working on in terms of new clients, new territories. There was mention of new products and services or new offerings in terms of the different services that can be offered. So, yeah, I'm not sure. Re1GS personally, I'd have to see what comes out for them in terms of updates as to what would have heard during IPO time. So Julian, personally read the lab. I think they have not recovered from the pandemic for lab, I'd say. When I looked at the last report, when I looked at the last few reports, I did a stock review last year for the lab. And I think that they are clearly just showing the impact of the pandemic still, meaning some of the projects that they would normally get, some of the companies that they would typically work with, maybe those aren't coming in the same way. And I know that their investment in Scope Caribbean was not working out last time I checked as well. So Scope was generating a loss for them. And so it's not a company that I have on my radar at all right now, because I don't think I've seen where, well, I don't see things changing for them soon until things are maybe overall better. But the truth is, I don't know. I haven't heard from the company, meaning I'll look at their report, but I did tell you, I will say, when I looked at their last MD&A, it looked like the narrative in the outlook sounded similar. Meaning when I read it, I could have sworn when I did the stock review of it sometime last year or a year before, the outlook sounded very similar to what they had before, right? So, yeah, not sure about the lab. Honestly, I'd say look to see when projects improve for them. Look to see when profitability starts to improve. They're in a service-based industry, so salaries are high. So yeah. Lanestra, I actually was hoping to get an interview with T-Tech. I do think they have an opportunity with Data Protection Act as well, but that was delayed, actually, meaning companies can register, but I don't think, we're in Jamaica. That's all I'll say. That's all I'll say. Was there any other companies? I have 8 more minutes that I can speak to. If there's any other company you want my thoughts on, guys, let me know in the chat and we'll close out on the hour. But I'll mention again for those who may be just joining. Well, first I'll ask you to like the video. If you've been with us from the start, please do like the video. We have an investment class this Saturday, investing in the US markets. And we're going to be introducing persons how to sign up, how to purchase using interactive brokers, some of the tools that you can look to do company analysis, and then just some best practices. All right, let me choose one of these. Let me start with Mailpack. So Mailpack actually did a stock review for Mailpack last week on Market Money. Similar to what I was saying when we were talking about the energy sector earlier, I think Mailpack is going to have. So first of all, when I did the stock review, they had a 39% decrease in net profit for that quarter, I think it was. That was a bit concerning. Now the acquisition bodes very well for them, meaning I don't know how many packages they deliver now, but they said they'll be able to deliver up to 1.5 million packages. So we saw where they would have announced the acquisition of MyCart Express, but I don't know the history of MyCart Express. I don't know how much revenues they generate. I don't know the number of volume in terms of packages, but I do know that the acquisition should be a good thing. I do know that they'll be positioned well, but it's a highly competitive market in terms of, there's a reason why they would have pursued the acquisition, I would say. And I'd love to see how the year goes, because I believe when Kyrie did the Taking Stock interview, he mentioned that Well, we saw recently where it was announced that the transaction was finalized, so it's official. And I think he mentioned on Taking Stock that the year is they're going to spend the year kind of assessing the value of MyCart Express. So based on, I think the terms of the transaction is based on their performance for 2024, right? So, but Mailpack has been trading, I think, at a reasonable price. I think their dividend is usually good. And so one to watch, definitely. Roswell, who is that for? So Spurtree, I think, yeah, Sean, I'm saying the same thing, that I think Mailpack is in a competitive space, but so is Wigton, so is Fesco, so is RPL. So any industry that's successful is going to have competition, right? So I don't think that that's necessarily something that will impact long term, meaning you will have some form of consolidation. Look at it this way: dollar is in a competitive industry, and look what they did in terms of revenues, right? So I'll just say that. So I can look at one more company. Who is that for, Orville? The rights issue was poorly executed. For who? Who are you talking about? Dave, I can't speak to L.E.A.R.N. I don't think we've seen anything from L.E.A.R.N. since their AGM. I think October or November last year. I have no idea what's happening with L.E.A.R.N. Except I think they're close to IPO price now, if I'm not mistaken. And so I'd have to see, another report to see what's happening. So I don't know what's happening with Edufocal Africa, what's happening with Clever School Teacher. Don't know what's happening there. For Fesco, we had an earnings call with them recently. So they did acquire location on Spanish Town Road. And so they're actually going to be building out on the same stretch as RPL, I think further up the road. Same stretch, I think, as Yardman has a location there. I think Rubis has a location on Spanish Town Road. No, not Spanish Town Road. Rubis is on Marcus Garvey. But, I mean, yeah, Fesco is one that I'm sure we'll hear more from. All right, so Chike is saying Mailpack is in a worse position, in my opinion, than the others. Worse in what sense, Chike? Chike, if you want to join me if you join me backstage, we're not finishing in 2 minutes. But let me know why you say that. Sales is saying, given the fall of iCreate, should we be skeptical about that stuff in L.E.A.R.N? I'm not sure what iCreate has to do with L.E.A.R.N. In what sense? Let me know what you're talking about. Those companies aren't comparable in any way, in my opinion. With Rocket Ship, with next day delivery, I expect ShipMe and others to follow. That will put some serious pressure. Yes, so I did see that. I saw Jillian. I saw, I think, Mark Gale saying something about Rocket Ship. But those things, to me, Chike, if Rocket Ship can do it, I don't see why Mailpack can't do it. Meaning, if anything, they should be able to match anything that anybody else is doing. Especially, I think the Rocket Ship segment is the MyCart Express segment. Sean says Mailpack shows no sign of innovation. The only way that Mailpack grows through acquisition. I mean, there's nothing wrong with going through acquisitions. That's been their model. If you remember Global Couriers decades ago, Mailpack would have acquired them. And Kari has been on our channel in an interview saying, inorganic growth is something that they'll always take the opportunity to grow through. And if you were at our conference, Grow Your Wealth, in December, he spoke about that as well, right? So I don't necessarily see anything wrong with that. Innovation, you can innovate or achieve innovation through acquisition as well. What I mean is, if you acquire a company that has an innovative product or service, you essentially benefit from that when you acquire them. So I don't necessarily agree with that statement, I'd say. Mailpack needs to take advantage of the industry threshold. I'm hoping that they do. All right, so guys, thank you so much. I think I'll close off now. Just to say again, we do have our investment class this Saturday. Be sure to sign up if you're watching wherever you're watching from. Link in our bio should get you to this class. And we are going to be having our Grow Your Wealth tickets to be on sale very soon. So stay tuned for that. Sales is saying, wait, is this Carrie, by the way? Carrie, is this you? I haven't seen you in a minute. Was L.E.A.R.N, I create one-on-one overhyped. Sales, I don't know what you're saying here. L.E.A.R.N, I create on one-on-one. I don't see that comparison. The only thing in common with those three companies is that they're junior market companies. Even one-on-one and Edifocal, I wouldn't even compare because of their business model, right? So Stefan is asking, has Mailpack ever given a breakout of their shipping? No. But Mailpack traditionally focuses, I believe, on the higher end clientele, and MyCart Express is going to be focusing on the lower end clientele. So I think that's how the businesses will combine. No, Orville, I'll message him and see. Final comment, companies were trading at a normal price in 2019. Now they're really low. Trading high at a normal price. I don't understand that statement. But I do think that companies will get back to 2019 prices. I wouldn't say this year, but in the near future. And I do think that it's a great opportunity to buy companies. So to me, I'd be thinking about which companies stand to do well when things recover. I'd be buying massive volumes in those companies right now, and I'd be waiting for the market to recover. I know it's tempting to go for short-term gains. Now, if that is something that you're good at, absolutely no problem with it. But for the average investor, which most of you are, so there are 300 people on the live right now, I'd say maybe 50 persons on the stream are maybe good at short-term trading. The rest of you probably better off thinking in average terms, meaning just buy good companies, get good volume, and wait, right? And that's your best bet. And I'm not making a judgment call, right? I'm just using statistics in terms of what I think the makeup of the group is, and just from what persons have said to me. So what I'm doing personally now is just buying volume, I'm reinvesting dividends, and I'm just continuing to benefit from the state that the market is in right now. So I'm prioritizing cash flow, prioritizing companies paying dividends, and those are the ones that I'm seeing realizing cap gains. All right. So I know I said final question with Roswell, but I'll take this one. When do you think the market will recover? Seems like that's not happening anytime soon. So personally, if I were to tell you, Sean, I don't think it's 6 or 7 years right now. I'm thinking it will be 3 years. And maybe one day I'll explain that 3-year timeline. But I do think personally it's going to be 3 years, meaning I think we'll see some improvements at the end of this year going into next, but it's not going to be to 2019 levels. I think things will get better next year. But in terms of getting back to 2019 levels, I don't think it's for another 2 to 3 years, right? So my investment strategy that I have now, I'm planning to maintain for a while, right? Thank you guys so much for being here. And I really do appreciate everybody, even more so now that we're at 10K. I really appreciate that milestone for us. Please like the video if you have not done so yet. We resume our regular episodes of Market Money next week. And I am going to be doing an update to the video of the Excel tracker, because a lot of persons message me and saying the link to the Mayberry trade sheet isn't working for them. So I'm going to do an update to that video and then show you how to build a stock dashboard using Excel. So look out for that. Thanks again for watching. I'll see you in the very next video.